Warning: these social media platforms may be hazardous to your health. Censorship kills. Pain coming. This has been a PSA by Breaking Spectre. Well, good morning, everybody. How we doing? Spectre here on this now 15th day of November, Monday. Had a little flurry activity here early this morning, a little bit of a gray day in the central part of the country here, a little chipper, and of course we're definitely deep in the fall time. Looking upon Thanksgiving here coming at us rather quickly. Hopefully you guys are doing well. Got a lot to cover on the broadcast here this morning, and we're going to talk a little bit about some CEOs challenging these mandates. We're going to talk about 3D printed neighborhoods, U.S. food banks not struggling to keep up with everything, what happens in a Zoom and Amazon Minute on the old interwebs, and of course Mockingbird Media and what they've been saying about inflation, chips, and of course the green energy push obviously having the reverse effect. We're going to talk a little bit about all of that here in just a moment, so stick around. I'll be right back. Hey everybody, Spectre here. Just wanted to give a big thank you to all you guys who continue to support my work. Jump in, day out on the streams, support all the various pieces I put out, etc., etc. And in doing so, I figured what the heck, we'll put some merch out there if you guys wish to continue to support and help defray some of the costs of streaming, which many of you guys know many of us incur. Got a handful of shirts and that here. Spectre Does News. We got the Realize, Real Lies shirt and that you hear on my PSA periodically. And of course the No BS insignia from the show I do over on the 5x5 channel, all of which you can get for the low price of $19.99. Aside from that, you can get the Let's Go Brandon hashtag FJB shirt as well in a variety of colors. And I've recently added the hoodies in a variety of colors you can get right there as well. And last but not least, you can grab yourself a No BS shirt and the Zip Up hoodie as well. If you don't want any articles of clothing, well, you can grab yourself a mug or a 20-ounce water tumbler if you wish. Your choice. And of course, as always, just want to thank you, the listeners, the audience, those who are in chat day in, day out. Thank you for your continued support. All right, right into it we go here this morning. Looking at the old weather maps here this morning, looks like we had some storms net push off the old east coast here over the weekend here. Maybe you got a little bit of rain, snow mix, who knows. A little bit pushing through the old Midwest here this morning, and doesn't look like it's going to hang around too long. And of course we got some system and that just starting to come across the old northwest here. Temperature wise this morning, well, looks like we're a little chilly across the middle part of the country with this little cold air dip here through the upper Midwest and whatnot, but other than that, looks to be a pretty decent day. All right, so as futures rise as usual, approaching all-time high. U.S. equity futures resume their upward climb after Goldman quadrupled down on its call for a massive year-end melt-up driven by $15 billion in inflows every single day as major technology stocks advanced and as investors awaited a slew of retail earnings and economic data this week to gauge the health of consumer spending while keeping an eye on runaway inflation. Better than estimated profit growth has led to a rally in markets, helping ease recent concerns over the hottest U.S. inflation in 30 years. At 7:30 a.m. Eastern, Dow E-minis were up 94 points, or 0.25%. S&P 500 E-minis were up 9 points, or 0.2%, and about 20 points from their all-time high around 47.11, while NASDAQ 100 E-minis were up 30.5 points, or 0.19%. Of course, graphically, there we see the old E-minis here this morning. The three major Wall Street indexes had fallen between 0.3 and 0.7 last week when the S&P 500 also snapped its longest winning streak since August 2020, amid concerns over high inflation and weakening consumer sentiment. Investors had begun pivoting into economically resilient sectors, mainly technology, towards the end of the week. So flashing forward into what are some of the movers here today. EasyJet cut to reduce from hold at Kepler-Chevreux due to deteriorating traffic trends and a risk that it has to incentivize demand with fare discounts. Alphen-Beher loses its only buy rating as Berenberg downgrades to hold on limited near-term upside, even after last week's sell-off in the shares. Direct Line cut to hold and Admiral raised to buy at Berenberg with the broker switching preferences in its UK non-life insurer coverage. B&M European is cut to underperform from sector perform at RBC, with growth set to become harder to deliver for the discount retailer and better value seen elsewhere in the sector. Wood's strategic review of its built environment business could unlock meaningful value. Citi writes in note upgrading the energy services firm to buy. And so flashing forward, we get down into the old market snapshot here this morning. S&P 500 futures up 0.1%, 46.85 even. Stocks Europe 600 little changed at 487 and change. The Nikkei up 0.6% to 29,776.80. Shanghai Composite down 0.2% to 35.33 and change. Brent futures down 0.9% to 81.46 a barrel. Gold spot down 0.2% to 1860.89 an ounce. US dollar index little changed at 95.09, and the euro little changed at 1.1447. Some other overnight news out of Bloomberg. Federal Reserve Bank of Minneapolis President Neil Kashkari said the U.S. Central Bank shouldn't overreact to elevated inflation even as it causes pain for Americans, because it is likely to prove temporary. Bottom line, they're holding strong to the narrative that it's temporary, transitory, and everything else but what it actually is, and not going anywhere anytime soon. A reduction in China's reserve requirement ratio looks increasingly unlikely after the authorities rolled over all policy loans coming due, and data surprised on the upside, suggesting that bonds will have little room to gain. China's industrial output rose 3.5% in October from a year earlier, while retail sales growth accelerated to 4.9%, beating economists' forecasts. Japan's gross domestic product contracted at an annualized pace of 3% in the 3 months through September from the previous quarter, the Cabinet Office reported Monday. Economists had forecast a 0.7% decline. Bank of Japan Governor Hirohiko Kuroda said financial stress from the pandemic is limited to certain sectors of the economy, potentially signaling the BOJ is planning to scale back its COVID-era funding program. European Central Bank President Christine Lagarde doubled down on her assessment that euro area inflation will ease as economies rebound, falling back below the 2% target in the medium term. Yet, analysts see it faster than previously thought this year and next. A short-lived reprieve for emerging market carry trades funded in dollars looks to be over, with an upsurge in U.S. inflation making the outlook increasingly treacherous. The UK is expanding its COVID-19 booster program to younger people as the country seeks to head off another wave of infections this winter. A third vaccine dose will be available to people aged 40 to 49 starting 6 months after their second shot, the government said on Monday. Oman said there was no need for OPEC Plus to accelerate oil production increases, signaling at least some members of the group will continue to resist U.S. pressure for more crude. Over to News Squawk and back over to Asia, says Cathay crew who flew from Frankfurt doing 21-day quarantine. Duterte runs for Philippine Senate, avoids clash with daughter. So it seems that they're flip-flopping roles. Duterte jumping out of the presidency while the daughter jumps up to it, and looks like Duterte is actually just going to run for Senate instead. Interesting. Greenland jumps in bond market after classification change, and Chinese startup Maikai is said to pick banks for Hong Kong IPO. Back over to Europe, says UK expands COVID-19 booster program to people in their 40s. Austria locks down unvaccinated as Europe tightens COVID curbs. Cathay crew who flew from Frankfurt doing 21-day quarantine, and Telefonica launches tender offer for hybrid notes. As far as the oil event calendar today, pretty skinny, 8:30 a.m. November Empire Manufacturing estimated at a 22.0. Prior print was a 19.8. So aside from that, looking at the week ahead, the Earnings Whispers here has got all the retail folks net coming up on the week. Looks like Tyson and Advance Auto and a couple others net here today. Throughout the week, we're going to see some of the big box stores like Walmart and Home Depot, Lowe's, Target, Kohl's, Macy's net all throughout the week. So be a pretty good gauge as to whether or not all those shipments sitting on the water have had any effects, and whether or not consumers are indeed still spending like crazy, or if we're seeing a major slowdown. All right, so aside from that, CEO says, I am challenging the vaccine mandate to protect my workers' jobs. This by Angela Phillips over at the Ohio based Phillips Manufacturing and Tower Company, which includes Shelby Welded Tube, first published in Real Clear Policy. The Biden admin has finally published its anticipated ultimatum threatening companies like mine with severe fines and penalties for not firing any employee who declines to be vaccinated against or submit to invasive weekly testing for COVID-19. The new rule, promulgated by the U.S. Labor Department's Occupational Safety and Health Administration, aka OSHA, under the guise of workplace safety, may well bankrupt the business my father founded. So, as the CEO of the Phillips Manufacturing and Tower Company, I am joining with the Buckeye Institute to challenge OSHA's vaccine mandate in court. And here's why. Phillips is a 54-year-old company based in Shelby, Ohio, that manufactures specialty welded steel tubing for automotive, appliance, and construction industries. OSHA's emergency rule applies to companies with 100 or more employees. At our Shelby Welded Tube facility, we employ 104 people. As a family owned business, I take the health of my workers seriously. They are my neighbors and my friends. When I heard of the mandate, we conducted a survey of our workers to see what the impacts would be. It revealed that 28 employees are fully vaccinated, while antibody testing conducted at company expense found that another 16 employees have tested positive for COVID-19 antibodies and likely possess natural immunity. At least 47 employees have indicated they have not and will not be vaccinated. 17 of those 47 unvaccinated workers said that they would quit or be fired before complying with the vaccine or testing mandate. Those are 17 skilled workers that Phillips cannot afford to lose. Perhaps the Biden administration remains unaware of the labor shortage currently plaguing the U.S. labor market, generally, and industrial manufacturing especially. Like many companies, Phillips is already understaffed, with 7 job openings we have been unable to fill. Employees already work overtime to keep pace with the customer demand, working 10-hour shifts, 6 days a week on average. Firing 17 veteran members of the Phillips team certainly won't help. Accounting estimates that it will cost Phillips close to $1 million in additional overtime, and recruiting and training new employees to replace those lost to the mandate, assuming the company can find them. And that also assumes that Phillips will continue to meet existing customer orders using extra overtime for remaining employees. No easy task, and not a safe assumption. If a short-handed Phillips cannot meet contractual production requirements due to the mandate-fueled labor shortage, then Phillips could lose customers and face significant penalties. Many Phillips customers are outside the U.S., primarily in Mexico, and may look to foreign competitors or companies with fewer than 100 workers that are not subject to the mandate or the shortages it creates. And one Phillips contract, for example, imposes a $25,000 penalty for each hour that the customer is without the promised product. Such obligations and penalties help protect supply chains across the industry, but those obligations and supply chains may soon be broken, and customers may soon go elsewhere thanks to the admin's callous new rule. Complying with OSHA's vaccine mandate and testing requirements risks catastrophic financial consequences. It also means firing qualified, well-trained, hard-working employees who rely on their jobs at Phillips Manufacturing and Tower Company to feed their families and pay their mortgages, for no reason other than to avoid draconian federal fines. Indeed, these employees may very well have the natural immunity that we tested for, which studies show to be more robust and longer lasting than vaccinated immunity. OSHA has no authority to require Phillips or any other company to make such a Hobson's choice. OSHA's vaccine or testing ultimatum is unlike any other occupational health and safety reg inasmuch as it tries to regulate an employee's individual decision not to receive an injection, and it does not regulate commercial activity inasmuch as employees subject to the mandate do not even pay for the vaccines. As the Biden admin officials have publicly admitted, the vaccine mandate is a brazen attempt to coerce private companies into enforcing a vaccine requirement that Washington lacks the legal authority to require. Philips is one company unwilling to do the admin's dirty work. Well, one of many, because if you recall, we've talked a little bit about places like In-N-Out Burger over in California, where a couple have actually been shut down by their local health departments for not doing the state's work there, checking vaccine passports and segregating customers as to who is versus who is not. So I would look for a lot more resistance from companies in that regard. And again, just as a reminder, no one rules if no one obeys. And that's when it's going to come down to, a massive resistance, period. So aside from that, the world's largest 3D printed neighborhood is coming to Austin, Texas. And of course, we've talked, obviously, with inflation, we've talked about wood prices net up astronomically high earlier part of this year. Looking for ways to combat that, we get this. It says construction of the world's largest community of 3D printed homes is expected to break ground next year in Austin, Texas. Lennar, the nation's second largest home builder, has teamed up with ICON, a technology pioneer specializing in large-scale 3D printing, to print 100 single-story houses using a giant 3D printer on-site to lay concrete-based building material. Lennar co-CEO John Jaffe recently stressed that the entire building industry faced shortages of materials and skyrocketing costs. To solve this problem, the company is turning to 3D printing. Labor and material shortages are two of the biggest factors pushing the dream of homeownership out of reach for many American families. Lennar has always expanded the boundaries of technological innovation to keep quality homes affordable, and 3D printing is an immensely encouraging approach, Eric Feeder, president of Lennox, Lennar's investment arm, said in a press release. Digital renderings of the 3D printed neighborhood were released last week. So apparently this is what it potentially could look like. So the printers will squeeze out concrete in layers to build the frames of homes. Each home is expected to take a week to build. Icon's 3D printing technology can print homes up to 3,000 square feet and do it in less time with less waste than conventional methods. Construction scale 3D printing not only delivers higher quality homes faster and more affordably, but fleets of printers can change the way the entire communities are built for the better. The United States faces a deficit of approximately 5 million new homes, so there is a profound need to swiftly increase supply without compromising quality, beauty, or sustainability, and that is exactly the strength of our technology, ICON co-founder and CEO Jason Ballard said. With supply chain disruptions and soaring commodity costs, we've started to notice that more and more homes are being 3D printed. We told readers in May, screw lumber, just 3D print your next home, because wood prices were at record highs and uneconomic to frame out a house. Also, we noted homes in Florida and Virginia were printed earlier this year. Now, an entire neighborhood in Austin is about to be printed. So what's next? Print an entire city? It's a good question. Well, I guess one question I might have is how long before we start seeing commodity prices and material prices not jump up just to be able to print concrete? You know, at the end of the day, everything is going up. It's not just wood, it's not just copper, it's not just beef, poultry, and everything else under the sun. But I would expect that perhaps gravel and things that comprise concrete to follow suit as well. And guess what? It's got to be mined, which requires what? Dirty fossil fuels. Interesting. In any case, U.S. food banks are struggling to feed Hungary amid perfect storm of food inflation. So as this inflation goes sky high, and we're constantly told, well, it's just temporary or transitory, which is a bunch of bunk, well, the folks are actually feeling the pinch on this, and it's stressing out the U.S. food banks. America's largest food bank struggles to feed people amid a perfect storm of surging food prices and supply chain woes. Katie Fitzgerald, COO of Feeding America, a nonprofit org that operates more than 200 food banks across the country, told AP News that their network of food banks is already stretched thin due to the unprecedented demand spurred by the virus pandemic downturn in the economy last year. She warned that it has become more difficult for our organization to absorb food inflation, resulting in fewer families being fed this holiday season. Supply chain woes and disruptions, lower inventory, higher transportation and fuel costs, and labor shortages make matters worse for food banks that millions of people rely on. She said her org has already swapped out smaller sized food products or entirely substituted some to stretch the dollar further. Fitzgerald said soaring food inflation is an insult to injury for families who depend on food banks. Michael Altfest, the San Francisco Bay Area director, the Alameda County Community Food Bank in Oakland, said the food bank spends an additional $60,000 a month on food and is spending $1 million a month to distribute 4.5 million pounds of food. Altfest said in a pre-COVID times, the food bank was spending a quarter of the money to distribute 2.5 million pounds of food. He pointed out prices for canned green beans and peaches are up 9%. Canned tuna and frozen tilapia are up more than 6%. 5-pound frozen chickens rose 13%, and oatmeal jumped 17%. New people are showing up every week at the Shiloh Mercy House Food Pantry in East Oakland, despite President Biden promoting his economic success and Build Back Better plan. Soaring food inflation is hurting families, and a lot of people are just saying they can't afford food, Jason Bautista, the charity's event manager, said. This comes as consumer prices on Wednesday rose to their highest level in decades. Prices for meats, poultry, fish, and eggs rose 11.9%, with the sub-index for beef increasing 20.1%, and the index for pork rising 14.1%. Its most significant 12-month increase since the period ending December 1990. And it says Oakland resident Sonia Lujan Perez, 45, pays $2,200 in monthly rent and has no money left to feed her family. She frequents local food banks because food prices have skyrocketed over the past year. Lujan Perez said the food bank is wonderful for me because I will save a lot of money. This Christmas would be rough for her 2 children because she won't afford gifts. Biden's next political nightmare has already arrived: food inflation. Real wage gains are being wiped out as the cost of everything soars. The souring mood for the president is showing up in polling data. And of course, we've talked about this graph: FAO Global Food Price Index inverted versus Biden's job approval basically in the toilet. And it's only going to get worse. But again, I might caution and say that not a finger is going to be lifted by these folks because this is exactly what they planned. This is a feature. It was planned. It was baked in. This is exactly what they wanted. We're not going to have to rely on the government to provide and take up the cause to correct this. They can't. It's not the government that needs to do it. It's we the people. It's time we recognize it and get it done. So from Amazon to Zoom, what happens in an internet minute in 2021? It says in our everyday lives, not much may happen in a minute, but as visual capitalist Iran Ali details below, when gauging the depth of the internet activity occurring all at once, it can be extraordinary. Today, around 5 billion internet users exist across the globe. This annual infographic from Domo captures just how much activity is going on in any given minute, and the amount of data being generated by users. To put it mildly, there's a lot. And so this is Data Never Sleeps 9.0, how much data is generated every single minute. And it's pretty astounding, really. I've seen this graphic a number of times over the years, but this one's up there. So let's round trip this thing. Starting at the 12 o'clock, Google conducts 5.7 million searches. Mind you, this is all in every minute of the day. Discord users send 668,000 messages. 12 million people send an iMessage. Clubhouse creates 208 rooms. Snapchat users send 2 million Snapchats in one single minute of the day. Amazon customers spend 283,000. 6 million people shop online. Strava athletes share 1,500 activities. Instacart users spend 67 grand a minute. Venmo users send 304,000. Slack users send 148,000 messages. Zoom hosts 856 minutes of webinars. Teams connects 100,000 users. Netflix users stream 452,000 hours in 1 minute. YouTube users stream 694,000 hours in 1 minute. Facebook Live receives 44 million views. Facebook users share 240,000 photos. Instagram users share 65,000 photos. Twitter users post 575,000 tweets in 1 minute. And TikTok users watch 167 million videos in 1 minute of the day. That's pretty extraordinary. And in this data-centric world where just about everything is online, it's probably going to get worse. Or better, depending on which way you look at it, I suppose, if you invest in any of those companies. But global internet population growth has grown from, about 3.4 billion back in 2016 up to about 5.2 as we sit here in 2021. This gives a breakdown. We just covered a lot of that. It says one tangible measure of this influence is a massive amount of revenue big tech companies bring in. To get a better sense of this, we can look at the big tech's revenue generating capabilities on a per minute basis as well. So Amazon revenue per minute is $955,517 per minute. Mind you, their market cap is $1.84 billion. Is that right? 1,840 billion. There we go. Yeah, it's more like closer to trillions, I think we're talking now. Apple, $848,090 on a per minute basis. That's extraordinary. Google, $433,014 per minute. Microsoft, Facebook, Tesla, Netflix, all there as well. Internet minute over the years. Back in 2016, Snapchat users 527,000 photos per minute compared to 2 million in 2021. So that's about a 4x jump. 2017, Twitter saw 452,000 tweets per minute compared to 575,000 in 2021, etc., etc. And there we see services that appeared in the data never sleep as well. So they've been tracking this for quite a while, and it's pretty astounding to see when it's especially graphically laid out. But interesting nonetheless. All right, so aside from that, used tractor prices skyrocketed amid deer strike. And of course, along with everything else, supply chains not broken down, strikes not taking place, everything's going to go up. It's not going to reverse anytime soon. The 4-week-old strike at 12 of Deere and Company's Midwest factories and facilities is creating a shortage of new tractors and parts that have forced some farmers to turn to secondary markets. The Machinery Pete Used Values Index, an index of used farm equipment values in North America, jumped to 9.5 in the third quarter, hitting levels not seen since the commodity boom a decade ago. For the first 9 months of the year, the index was up 22% and is set to make the largest quarterly gain in the fourth. And here we see that ticking up to, probably levels not seen since 2013 or before. Greg Peterson, who has been compiling the index for nearly 3 decades, told Bloomberg that a match is now lit while there's a John Deere strike. What he's referring to is that farmers have no other choice than to search for used tractors, equipment, and parts at auction houses because the strike at Deere is inhibiting their ability to source new parts or tractors. It says, for some context, Machinery Pete's index is equivalent to Kelley Blue Book for cars. It helps farmers assess the value of tractors. We noted last week farmers would flood the secondary markets amid the Deere strike. Peterson wouldn't give full details about the index's fourth quarter reading because he has paying clients, but said bidding wars at auctions could push the index to record high levels. The surge in used prices has gotten to the point now, some farmers say, where it's starting to make them worry they'll struggle to find a tractor if they need one for the planting season next year. One of the records that Peterson saw fall last week highlighted this angst. There was this John Deere tractor up for sale at the auction in Kemar. It was old, built in 1998, but lightly used, having clocked fewer than 1,000 hours, and in pristine condition. The bidding started at $100,000 and quickly shot up to a final sale price of $170,000. That's $25,000 over the previous record for that specific model. Brand new version started at $205,000. The buyer was so desperate to get his hands on a tractor, Peterson says, that he drove all the way in from Illinois to bid on this one. When he won, he loaded it onto a tractor hitched to his truck and hauled it 12 hours back home, according to Bloomberg. Thanks to the deer strike and supply chain woes, secondary farm equipment markets are seeing an abundance of demand that is driving up prices. Some farmers cannot source parts or find suitable tractors for the next season, which may affect their plantings. Well, what about co-oping? What about leveraging other farmers? And, think a little bit outside the box. Do we necessarily need to own all of our own equipment at this point? I don't know. Just a thought. Might actually save you in the long run. So what if your field may not get in for a week until after your neighbor farmer has to plant his 1,800 acres or what have you? But I mean, that's a possibility as well, right? Until this strike is over or things tend to resume. I don't know. Just think outside the box a little bit here. So aside from that, NBC's Stephanie Rule embarrasses herself over dirty little secret about inflation. And of course, we've talked a little bit about the Mockingbird media here, their gaffes here as of late, thinking they know what's going on with inflation, and they're absurd at best. So we find out, fact, the cost of stuff that Americans are buying is rising at its fastest pace in 30 years. It says, fact, short-term inflation expectations surged to a new cycle high, the highest since 2008. That's per University of Michigan inflation expectations. Fact, as buying attitudes for homes, cars, and large household durables have crashed to record lows, citing high prices, President Biden's approval rating is at the lowest of his term, falling at the fastest pace of any president since World War II. So, it's no surprise that last week we saw MSDNC go to bat for the Biden admin, deploying their best pretzel logician to explain why all this inflation is literally, wait for it, good. In a now deleted tweet, MSDNC attempted the ultimate gaslighting by claiming that inflation we're seeing now is a good thing. And there's said tweet in question, now deleted. Says not surprisingly, after getting ratioed in a furious backlash, MSDNC did the only thing it could and deleted its tweet. And its latest attempt at mass gaslighting propaganda went terribly wrong. But the NBC wing of the White House refuses to abandon its propagandizing. And now, NBC reporter Stephanie Rule, clearly in camp transitory, even as the Fed itself is starting to distance itself from that narrative, explains in a recent interview that nobody knows exactly when prices are going down. But, she says, don't sweat the soaring cost of living America, because, as the former Wall Streeter explains, you have to put all this in perspective. Oh, really? Is that all it takes? Just a little perspective? Well, the perspective is that my wallet is probably getting a little bit lighter. That's pretty good perspective. She continues, this inflation is not in isolation, and the government predicted it was going to be a challenging recovery all tied to COVID. So, it's why you see things like that expanded child tax credit. You've got the families of over 60 million kids, on average, getting $430 a month. For people on fixed income, older people on Social Security that are getting those fixed payment adjusted next year, up 5.9% for inflation. And the dirty little secret here, while nobody likes to pay more, on average we have the money to do so. According to Zero Hedge, no, Steffi Love, real wages have declined for 7 straight months. And there we see that depicted graphically. Oh, Zero Hedge interjects again and says, as consumer prices are accelerating away from incomes, meaning inflation is rising faster than wages are keeping up, which basically gives you a negative wage and real growth. Household savings hit a record high over the pandemic. According to Zero Hedge, and what has happened since our dear Steph, the savings rate has crashed back to pre-COVID norms as Americans have burned through the quote-unquote pent-up cash to cover the soaring cost of living with Bidenflation. And it says while the stock market isn't the economy, you have over half of American households with some investment in the markets, and they hit market highs. Oh, Steffi, have you seen what Main Street has been doing since Wall Street reaches recorder and recorder highs? Yeah, Wall Street up, and up, global central bank liquidity proxy versus Main Street. It seems we've had a bit of a divergence since about, mid-2000s, early 2000s. So we need to put all of this in perspective. This time last year when you and I were talking, nobody had a vaccine, and now 200 million Americans do. And we're seeing this push of demand, and that's pushing up pricing. Perspective indeed. Inflation airhead NBC's Stephanie Roll says the dirty little secret of people complaining about paying higher prices for food and fuel for their homes is they can afford it just fine. According to her, people should have been saving during the pandemic and stocks look good. And I'm not even going to bother playing this at this point. It's absolutely ridiculous. How long before this NBC segment is deleted? And what affords Ms. Rule such a truly unique perspective to opine on the problem of the poor? Simple. Making millions from selling CDS to bet on the collapse of America's housing market, while at CS and Deutsche Bank, she started her career in finance in 1997 with Credit Suisse, First Boston. At CSFB, she served as a vice president, was the highest producing credit derivative salesperson in the U.S. After a 6-year stint at Credit Suisse, Rule moved back to Deutsche Bank, where she worked as managing director in structured credit sales within the fixed income division. This is just as we mocked with MSNBC's now deleted tweet, desperately gaslighting that inflation is a good thing. The meme is complete. Oh, this one, I think we showed this one the other day. There won't be inflation. There is no inflation. Inflation is transitory. And so on. So, bottom line, steer clear of the mockingbird media and their shenanigans trying to sell us and gaslight us into believing, oh, this is just temporary, oh, it's a good thing. Baloney. White House rejects Intel proposal to add semi-production capacity in China. We've talked quite a bit about semiconductor chip shortages now. Appears Intel decided they wanted to try and expand operations in China, and the White House says, not so much. Says days ago, we wrote about how VC companies in the U.S. were making significant investments in Chinese semiconductor companies. Shortly thereafter, it was reported the White House had rejected a plan by Intel to bolster their chip production capacity in China, according to Bloomberg. Intel had proposed using a factory in Chengdu, China, to manufacture silicon wafers, the report said. It could have been online by 2022, but the White House strongly discouraged the move. Intel likely had to listen, since the company is seeking government support in helping expand its capacity for manufacturing semis in the U.S. Oh, that catch-22. You see what happens when all these big tech corporations and everybody sitting on K Street decide they want to throw money into the coffers for politicians and everything else? Well, sometimes you kind of get bit. And the government says, not so much, and can't do that. Intel told Bloomberg it was now looking at other solutions that will also help us meet demand for the semiconductors essential to innovation and the economy. The company continued. Intel and the Biden admin share a goal to address the ongoing industry-wide shortage of microchips, and we have explored a number of approaches within the U.S. government. Our focus is on the significant ongoing expansion of our existing semiconductor manufacturing operations, and our plans to invest tens of billions of dollars in new wafer fabrication plants in the U.S. and Europe. I recall, just days ago we wrote how U.S. firms were splurging on Chinese semi deals, drawing scrutiny from the White House. U.S. venture capital firms have been ramping up investments in Chinese semiconductor companies despite the obvious security conflicts, a report from the Wall Street Journal said. Cumulatively, U.S. firms have helped raise billions for Chinese chip startups, we noted. There has been more than 58 deals in China's semiconductor industry from 2017 to 2020, we wrote. Among the active investors was Intel, who had invested in a Chinese company called Primarius Technologies Company, which makes chip design tools that the U.S. currently holds the lead in making. Intel told the Wall Street Journal last week that its China investments are less than 10% of the deals in global portfolio designed to support its business and generate return. And here we see the chip deals net over the years as well. So bottom line, looks like they've got slapped back down to reality here, and perhaps maybe this will wind down with everybody buying into China continuing to manufacture this stuff when we probably should be looking more domestically and getting it done here. So the big green push to get rid of coal had the opposite effect. Now, mind you, this is on the heels of COP26 wrapping up the farce that it was over the last 2 weeks. A lot of hot air bloviating, bunch of rich plutocrats and parasites over there with their 400 jets, obviously bloviating about we need to do this, that, and the other. And by the way, nothing's binding. And the more they push on this stuff, the more it's going to backfire. So Mike Shedlock says this as an alleged big win to eliminate coal turned into a bust and then some. And of course, we've talked about coal via Peabody and X-Coal and Alliance and that actually being sold out of contracts and that for every bit of coal they can mine through all of next year. So it's having the opposite effect. So there's coal consumption. Green is China, black India, US in gray, Japan, Russia, rest of the world in yellow. And rather than going down, where's it going? Opposite direction. So investors pushing mining giants to quit coal is backfiring. Bloomberg has an interesting story on how environmentalists pushing mining giants to quit coal has backfired. It was supposed to be a big win for climate activists. Another of the world's most powerful mining companies had caved to investors' demand that it stop digging up coal. Instead, Anglo American plc's exit from coal has become a case study for unintended consequences, transforming mines that were scheduled for eventual closure into the engine room for a growth-hungry coal business. And while it's a particularly stark example, it's not the only one, where rival BHP Group was struggling to sell an Australian colliery this year. The company surprised investors by applying to extend mining at the site by another 2 decades, an apparent attempt to sweeten its appeal to potential buyers. Now, after years of lobbying blue-chip companies to stop mining the most polluting fuel, there's a growing unease among climate activists and some investors that the policy many of them championed could lead to more coal being produced for longer. BHP may end up holding onto the Australian mine it was battling to sell, Bloomberg reported last week. Earlier this year, Glencore plc sounded out a major climate investor group before announcing it would increase its ownership of a big Colombian coal mine, according to people familiar with the matter. And of course, it's not just China. India now burns more coal than Europe and the US combined, and miners are betting on rising demand over the next decade from countries such as Vietnam, Bangladesh, and Indonesia, although pollution concerns and cheaper alternatives threaten to derail those plans. So it's tough to eliminate coal. Yes, it is. The push to abandon coal made selling the mines difficult, so companies chose to extend their life. Developing countries that invested in coal-powered electrical plants that have many years of useful life want reparations to develop new plants. New wind and solar plants are cheaper, but unreliable, and they are not cheaper than plants already built. Moreover, wind can die for days, and solar has, on average, 12 hours a day of outages. This places additional capital investment requirements for countries to build energy storage facilities. And they're still building. China alone is currently building or planning coal power plants that are the equivalent of 6 times Germany's entire coal burning capacity. Holy moly. So Asia in purple there, Europe in orange, and the rest of the world in gray. Obviously, in terms of megawatts and generation, obviously this is still relatively high, and most of that being in Asia. Says it's tough to get rid of coal when you build more coal plants than you retire. Gee, you think? And of course, COP26, which has just concluded. I'll do a separate report on that later. There were some alleged successes, including a watered-down pledge at the last minute to phase down, rather than phase out, coal. This is considered a quote-unquote success because after weeks of bickering, no statement at all regarding coal was expected. Credit India with backing of China for the watered-down pledge on coal. That alone should tell you what you need to know. The biggest failure also relates to coal. Rich countries did not make clear pledges to finance developing nations to the tune of what developing nations demand. Instead, nations promise to continue talking about funding for loss and damage associated with the adverse impacts of climate change. That means developing nations will not make much, if any, effort to get off coal. So, bottom line, it's a big wealth transfer. We know that from the start. A bunch of blowhards net over there, with the help of blah 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 herself. How dare you, Greta Thunberg, bloviating as well about rich countries. Never seen her ever hit China or India, have we? Anyway, also interesting news. Daily Caller had this piece says, "Let's Go Brandon cryptocurrency jumps 150% in 1 week." So apparently we have gone next level here with the whole Let's Go Brandon business, and apparently they must have fired up a coin of sorts along those lines. Who knew? Says a new cryptocurrency called Let's Go Brandon rose 150% in its first trading week. The digital coin, $FJB, began public trading November 8th, and in a week of trading it rose from, oh boy, a whole bunch of zeros, 34 to 91.42 US dollars, according to price tracking website CoinMarketCap. We are the greatest country in the world, and we're being laughed at on a global stage, says the official website for the coin, which describes its intention to use the coin to raise money for veterans. The more the price of FJB goes up, the more money is donated to charities that benefit veterans. Hedge fund manager and publicly facing FJB holder James Koutulis donated 25 grand worth of the cryptocurrency to Aquanauts Adaptive, a dive therapy program for veterans with disabilities, according to a representative of the coin. And there we see his tweet says, "Happy to announce my second donation of $25,000 worth of LGB coin to Aquanauts Adaptive, who provides dive therapy programs to vets with disabilities. Incredible group of people, near and dear to my heart. Happy to pay it forward." It says, the name of the coin is based on the Let's Go Brandon chant, which, in addition to the social media hashtag, has become a phenomenon at sporting events across the country. And of course, we all know how that started, and of course, how they are trying to squelch it as well. And of course, the chant was popularized after a reporter claimed a NASCAR crowd was chanting in support of driver Brandon Brown, according to Fox 21 News. And it says the crowd appears to be chanting F Joe Biden. Yeah. So there's that. Interesting. Only in America. All right. So aside from that, out of Breitbart, New York PD officers flee New York for better opportunities in Florida. Their police departments down there. And we knew that would happen. The harder these blue states and cities push, well, the more they're going to say FJB and move to greener pastures or redder states, if you prefer. Says police officers are leaving New York City Police Department and joining the police department in Lakeland, Florida, as officers say they are better received in the Florida community. And probably better weather, too, I might add. New York Post reported that 14 officers have fled the NYPD for the Lakeland Police Department in the past year. Lakeland embarked on a campaign months ago to recruit NYPD officers through social media. In April, the department sent a group to recruit officers in Times Square, the Post reports. One officer who made the transition to the Lakeland Police Department spoke of his experience with recruiters in Times Square in a September press conference with Florida Governor Ron DeSantis. Says former NYPD officer Matthew Spoto recalled his conversation with a background investigator at the Times Square meeting and called it an eye-opener. He said that you could park your police vehicles in front of your house, and to me, I thought that was mind-blowing, Spoto said, alluding to the difference in community perception of police in both cities. I used to have to lie about what I used to do. I used to have to tell people I was like a bartender because it was almost like I was ashamed to be a law enforcement officer. I think everybody, regardless of the career that you chose, you want to be appreciated in what you do. It doesn't matter what job you do, Spoto went on to say. The former NYPD officer also stated, I wanted to all these things to help people as an NYPD officer, but the tools and the laws that were set in front of me did not allow me to do so. According to New York City's official website, the starting rate for new officers is a $42,500 a year salary, while the minimum salary in Lakeland, Florida is $53,000, the Post reports, citing the Lakeland Ledger. The Post reports a major selling point to NYPD officers during the recruiting trip was the working in Lakeland, Florida comes without any city or state income taxes. Patrick Lynch, president of the Police Benevolent Association, spoke with the Post regarding the exodus of officers from the NYPD. Says many New York City cops are weighing our substandard salary against this ever-increasing challenges, scrutiny, and abuse, and they're voting with their feet, Lynch said. They don't even need to go all the way to Florida. There are many better paying police departments in and around New York City, and they're hiring, Lynch added. We certainly don't blame anybody for leaving, but New York City needs to wake up. The most recent factor resulting in tensions between officers in the NYPD is Mayor Bill de Blasio's vaccine mandate for municipal workers, which went into effect on November 1st, according to the Post. Says on Monday, Governor DeSantis further solidified the stark contrast between Florida and New York, stating, "Look, no cop, no firefighter, no nurse, nobody should be losing their jobs because of these jabs." Says we have to stand up for people and protect their jobs and protect their livelihoods, the governor added.
Look, nobody, no cop, no firefighter, no nurse, nobody should be losing their jobs because of these jabs. We have got to stand up for people and protect their jobs and protect their livelihoods.
So, in the words of DeSantis there, kudos to him. Other interesting bit that came through over the weekend, don't know if you saw this, FBI email servers hacked to send fake alerts to thousands, and curious as to what that is all about. Says, according to reports, the FBI appears to have been used as a pawn in a battle between hackers and security researchers when hackers compromised the agency's email servers on Saturday. According to Bleeping Computer, the FBI confirmed that on November 13th, intruders compromised its email servers and sent fake messages claiming recipients were vulnerable to data breaches. Go figure. According to Engadget, the emails attempted to blame the non-existent attacks on Vinny Troia, the CEO of dark web security firms Nightlion and Shadowbite. Spamhaus, a non-profit intelligence organization, quickly exposed the bogus messages. The attackers used legitimate FBI systems to carry out the attack, scraping email addresses from the American Registry for Internet Numbers, ARIN, database, among other places. In at least 2 waves, fake emails were sent to over 100,000 addresses. According to the report, the FBI described the hack as an ongoing situation and did not have any additional information to share at the time. It also requested that email recipients report such messages to the Bureau's Internet Crime Complaint Center or the Cybersecurity and Infrastructure Security Agency, aka CISA. So, interesting. And perhaps this is a bit of blowback, perhaps, as to the ransomware attacks and everything else. Maybe people are figuring out who really is perpetuating these attacks, and the ability of the FBI to just magically and mysteriously solve these crypto ransoms and get all that stuff back in near record time. I don't know, just a thought. And last but not least on the morning, to round things out, PJ Media has Surgeon General responds to Biden being overruled on the mandates. And so over the weekend, I believe it was either Friday or Saturday, I think we saw the Circuit Court of Appeals net where a lot of this stuff is played out with all these mandates, kind of reaffirm the stay and preventing these mandates from going through. So here's the rebuttal per the Surgeon General. Says, while public health experts warn of a yet another COVID winter surge and the White House faces legal battles over vaccine mandates, U.S. Surgeon General Vivek Murthy joined Fox News Sunday to discuss matters with host Chris Wallace. Oh, gee, there you go. Says Murthy seemed concerned about the consequences if mandates are permanently scrapped. I think it would be a setback for public health, he said. What we know very clearly is that when people get vaccinated, and the more people who get vaccinated, the quicker we're able to bring this pandemic to an end. Now remember, 2 weeks to flatten the curve, they told us early on, right? The more lives that we can ultimately save. An end? Even the New York Times admitted Friday what most Americans have long known. The bottom line is that COVID now presents a sort of risk to most vaccinated people that we unthinkingly accept in other parts of life. And never mind the fact that in Europe, they're basically just going to treat it as a common cold. They've said, hey, we're going to put up the white flag. We know we can't beat this sucker. It's no different than a common cold. It's going to be with us. Right? Surgeon General argued that vaccine requirements would work remarkably well, and that some businesses have already moved forward without a mandate by requiring employees to be immunized. The statement appears more political than science based since it lacks consideration for the importance of free choice as determined by patient and doctor. At its most basic, the doctor patient decision is a private decision, having nothing to do with partisan politics. In a strong opinion that directly invoked the White House's nefarious actions, the Fifth Circuit Court of Appeals ruled Friday evening that the mandate was both overly inclusive, by not taking into account differences in workplace settings, and exclusionary, by looking to protect workers in larger companies, quote, from a grave danger in the workplace, end quote, while at the same time, quote, making no attempt to shield employees, end quote, at companies whose workforce numbers miss the cutoff. And of course, there we see a big win, according to Ken Paxton, AG out of Texas, per disclosed TV there. Says rather than a delicately handled scalpel, the mandate is a one-size-fits-all sledgehammer that makes hardly any attempt to account for differences in workplace, the New Orleans-based court said. Wallace pertinently asked if public safety is the issue. How do you balance the drive for more jabs with the fact that police and healthcare workers in a number of cities are walking off of the jobs? What I think is important to appreciate in the broader picture is that the vast majority of people across this country, vast majority of workers are, in fact, in line with and will be in compliance with the general requirements, Murthy claimed. We've already seen that in the businesses that have put these requirements in place. Finally asked about the controversy surrounding NFL quarterback Aaron Rodgers, the Surgeon General quipped, we're not sole individuals entirely on our own. In any community, sometimes our decisions do affect other people. So, in the words of Vivek Murthy, AG, or not AG, but rather Surgeon General, and of course, talking with Chris Wallace apparently yesterday. Bottom line, we hit the highlights of that and the impact of those here on the broadcast here this morning, did we not? Company is basically saying, look, we're going to lose our workforce if we try and go through with this mandate. Never mind the fact it's outside the authority of somebody like OSHA. It's not in their purview. It's not typically what they do. And frankly, I like the argument that keeps getting brought up, and I know many of you guys may have seen this on Twitter, that hey, company A or corporation B, if you're going to require for me to stay aboard said company or corporation, this jab impacts me 24/7, not just as I'm clocked in for 8 hours a day, 10 hours a day, salaried or otherwise. So therefore, maybe the employees should go back to the employer with the provision that, hey, start paying me 24/7, 365. Because it's not like the jab clocks out when you clock out at the end of the day. Interesting argument to be made. All right, well, that is going to do it for the broadcast here this morning. Appreciate you guys tuning in as always, and look forward to seeing you back here tomorrow. Same time, same place, same bat channel. Take care. God bless everybody.